So for the current fiscal year, predicting that comparable sales are going to fall between 6 and 7.5%. Is that a reflection of reopening?
Yeah, overall for the year it would be. And so we're going to think of the year 21 as a 2-year stack. And the way I think about it is going through the pandemic, we gained a lot of business, including 11 million new customers that we can identify. And in 2021, we'll hold on to those customers, but not the same level of sales as the economy reopens. But we finished 21 stronger than the trajectory would have been if we hadn't made all those gains in the pandemic. So it's a rebaselining of the business as we go into 21.
In terms of that rebaselining, I mean, you've made a lot. You've struck partnerships with Google, for example. You've done a lot in terms of investing on the tech side as well. When it comes to some of that technology, when it comes to things like digital sales, how much of that do you expect to continue to grow as strongly as it has been?
It won't be the same rate of growth, but that too has rebaselined, Morgan, and we'll continue to grow that because we're expanding our drive-up-and-go locations. We're adding new delivery capabilities. We're making it easier for our customers to shop. All of the great products that we have in our store. We're putting automation technology in our stores, these micro-fulfillment centers. We're adding 7 more this year. So we are getting ready to continue that growth and make sure that it's profitable growth as we go forward.
Vivek, I'm wondering, on those delivery options, you know, as an industry, retail has sort of embraced this idea where you get delivery in a quote-unquote touchless manner. I know you guys have done some work with robotics and so forth. Do those survive an environment in which people truly feel comfortable being vaccinated and interacting with the human being again?
Carl, one thing we're seeing is certainly people coming back to stores a little. So I think people are feeling comfortable coming back into these into a store environment. At least a segment. People are coming, but there's more people coming into a store. Remember, part of these things that we've done to make things touchless and easy, we're also to make it more efficient. So I believe some of those things will stick. If you can transact without having to make contact, why wouldn't you do it? It's faster for everybody and better for everybody. So I think a lot of those technologies and capabilities will continue to remain, Carl.
Vivek, it's David Faber. You know, we've had a number of CEOs come on lately and said they're having a hard time finding new people if they have openings. I'm wondering, are you finding the same for your employee ranks and/or trying to replenish them?
In pockets, David, not broadly. And the reason is we have about 300,000 associates. A lot of them are part of our union labor pool, and we have contracts with them. They're well paid. And they stay with us. Many of our employees have been with us for 40 years in some cases. So we see less pressure on that. We see it in certain pockets of the business and in certain markets, but it's not a broad challenge for us.
Shepard Smith here. Thanks for watching CNBC on YouTube.